puts me in a spot of comfort as well as in a discomfort. The comfort is that all the speakers have spoken, so now I can speak, and there won't be anything that the other speakers can say something against that. But at the same time, I'm also mindful of the fact that some of the topics that I'm going to discuss today might have already been discussed by some of the speakers earlier. For instance, I'm going to talk about the time limit, which I'm sure would have been discussed in one way or other by any one of the speakers. In GST and the way this program has been structured, I think that is inevitable, where we have the overrun of or the overflow of discussions between one session and the other. Hence, you'll have to pardon me to that extent of where already it has been covered, still I'm covering, which is only to set the context for our discussion. So with that as the prelude, let's get into the discussion today about the adjudication of demand under GST. So when we look at, I hope you are able to see my presentation.
Yes, sir, perfectly.
Or is it showing in a different way? I'm not sure.
Sir, maybe you can do slideshow.
Yeah, just a moment. I'm trying that only. Yeah. Is it clear now?
Yeah, perfect.
Yes. Then I think we'll commence our discussion. So as I was saying, the adjudication process under GST is something which is closely intertwined with the assessment as well, and demand and recovery. And somehow, since this is an advanced level course in GST, all these three have been split into three separate sessions for discussion, which makes much more sense for us to go deeper and deeper into the probable and possible outcomes with respect to these topics. So in that, when I look at adjudication, the key element which I wanted to bring about, as I said, assessment has a definition under GST. Section 2, subsection 11 goes in detail about defining what is an assessment, but there is no definition of adjudication in the GST law. And in fact, I would say till section 75, there is no mention of the word adjudication at all in the GST law. So it starts only from section 75, wherein also the general rules which are prescribed for the purposes of adjudication or purpose of clearing the confirming the demand and recovery process. That is where we see the word adjudication being used. So where we need to look at it from a general understanding. So the adjudication process under GST is not preset. We need to determine as to what are all the relevant provisions or what are all the scenarios where I need to pull it from the legal provisions to understand that this is a adjudication related provision. To start off that, when I think about adjudication, and what we are going to discuss today will predominantly be around this that I'm going to discuss, which is one, the adjudication, which is resultant of an audit by the department under section 65. So if there is going to be an audit, there is going to be a follow through, how that happens and how the adjudication comes to us. Let me set the ball rolling by starting with the basics of section 65, which requires that before an audit is commenced, ADT 1 must be issued by the departmental officers for initiating the audit and giving us the time to provide the documents to them. Either the audit may happen at the departmental premises or they may visit our premises for the purposes of audit. All this is going to end when? It is going to be considered as completed when an ADT2 is issued. So the key question that would arise in between is that, can there be a DRC 1A? That is, in other words, since I'm also telling you that as many of the topics would have been already discussed, I'm directly getting into DRC 1A. This adjudication starts there. So can the audit officers, whatever objections they have raised during the audit, they need to now convert those objections into revenue paras. There can be an observation para, there can be a revenue para in the departmental audit conclusion. Even before an ADT2 is given, department can go about raising a revenue para, converting a revenue para into a DRC 1A. In other words, a notice, a pre-consultation notice. And as some of us would already be aware, is this a procedure which was envisaged right from the inception of GST? Certainly not so. This procedure has been put in place only after the Canon India judgment in case of in the customs, wherein the Supreme Court had laid down a guideline stating that if the show cause notice is going to be issued, which is going to be detrimental to the end taxpayer, so why not have a consultative notice, meaning have a consultation and then issue the show cause notice. For that purpose, this DRC 1A was introduced as a pre-activity to the actual activity of issue of show cause notice and summary under DRC 01. So the audit officers typically will be of two categories which we tend to face. One, audit officers who are appointed by the or who are from the CGST, and the audit officers from the SGST, depending upon who is taking up you for audit under section 65. And again, that depends upon which department you have been allocated to within that state. For instance, I may have a registration in Tamil Nadu where I am allocated to the state. Hence, the SGST department auditors will venture into my premises. Whereas, if I am also registered in the state of Andhra Pradesh, there I may have got allocated to the central GST. In those cases, the CGST officers will be the ones who will be auditing my books of accounts for the relevant period. Hence, the audit under section 65 can happen depending upon to which jurisdiction you have been allocated to, either by the central or the state officers. So this is one scenario where there can be an adjudication order. It can lead to the adjudication order. The audit will be undertaken. Post to the audit, the department will crystallize the revenue paragraphs into a demand by way of communicating through DRC 1A. Now that is the starting point of adjudication when it originates from an audit. Scenario 2 is whenever there is an inspection under section 67. Inspection by the department. Now this, unlike an audit, can be done by any of the GST departmental officers, meaning I may be allocated to the central, but the inspection at my premises could be carried out by the state officers and vice versa. This has been empowered and what we popularly call as the cross empowerment, which is allowed. Subject to section 6(2)(b), which clearly says if one matter is taken up by any of the officers, then the jurisdictional officer or the other officers would not have the right to pursue the same issue or the same proceeding with the taxpayer. So that is the exclusivity that has been granted, which in a way can help us if we are getting an ASMT 10 from both. It can be from the central, it is also from the state, or I am a assessee who is allocated to the state department, but I have been inspected by the central officers. I am already going through the legal proceedings of under section 67, where the data is being given for 5 years or 6 years. Parallelly, I receive an ASMT 10 from my allocated jurisdictional officer of state who is asking the same question, GSTR 3B versus 2A. Now I can very well give a reply saying I'm already subjected to another proceeding by another officer. Hence, though you are my jurisdictional officer, proper officer, you cannot further take up the adjudication of this notice. The reason being, you'll have to keep it exclusive. 6(2)(b) is the relevant provision which gives us that exclusivity. Now, with that in mind, now when we proceed, so the second possible adjudication order origin could be the inspection by the GST department. The third possibility of an adjudication order, and since today's topic of discussion is adjudication of demand, I am not getting into adjudication of refunds. That is also an order that is also passed under GST, but wherein the order is generally not passed for demand. Hence, I'm not taking up for discussion predominant elements of that order. But wherever the order in pursuant to a refund application can result in a demand, I'll touch upon that in the relevant slides when I come to that. So the third possible origin for an adjudication order in GST is the vehicle movement related. In other words, section 68 read with section 129. So when the inspection happens to the vehicle, which is carrying the goods, now what all can occur? What all can be the possibilities and what all the demands that can arise, the orders that needs to be passed by the department? Now that all will be one category of adjudication that will be expected when we look at adjudication of demands under GST. So I would take this as the context and we'll be going through and taking it through from here till how the adjudication process gets completed. Also looking at the key areas where we need to be careful when it comes to adjudication, plus certain legal developments which we need to keep in mind while we are in the process of getting our adjudication done. To start with, what are all the possible sections under which an adjudication order, including refund? I've excluded refund here because these are the other possible scenarios. There can be an order under section 52 for TCS related matters, 62, 63, 64, which I am sure under assessment, it would have already been completed. And section 122 to 127, which talks about the penal provisions. There can be orders individually there, but what we are today predominantly focusing is going to be around section 73, 74, 75, 76, 129 and 130. These are the places, in fact, 129, not even 130. So 73, 74, 75, 76 and 129 will be our core focus of discussion as adjudication, because the others would also, for instance, 62, 63, 64 would come typically under assessment, whereas 122 to 127, these penalties can come as a result of either the assessment procedure or during the adjudication as well. And I'm given to understand that offences and penalties have already been completed. Hence, how the process of adjudication will happen is what we are going to discuss more in detail with respect to these penalties. Now, the timelines. What is happening around us and what is it in store? As I said earlier, this is something which most of the speakers would have already taken you through. Yet, for setting my presentation a context, I need to go through this, wherein what I wanted to bring about is first the time limit with respect to section 74. Section 74, 73, two predominant sections for especially the adjudication proceedings. 73, 74, the basic difference lies in the intention. If there is an intention to evade tax, in other terms, we call it as mens rea. If there is going to be a culpable state of mind, then of course the provision that would get invoked is section 74. On the other hand, if it is not present, mens rea is absent, then the provisions of section 73 will be invoked for the purpose of adjudication, for the purpose of taking the matter into the next step. What is the time limit that is in the hands of the department till which they can call for data, they can make us liable for the prior periods? When we discuss section 74, two provisions combinedly will give us this answer. Section 74 subsection 10, read with 74 subsection 2. They combinedly talk about the time limit within which the notice, the order has to be passed. So it talks about saying that, okay, the order needs to be passed within 5 years. 5 years from when? 5 years from the due date of filing of annual return under section 44. So from that, within 5 years, the order needs to be passed. So that is where the other provision comes in and says, okay, the show cause notice should have been issued at least 6 months prior to that. So indirectly, what they are trying to communicate is that 4 years and 6 months is the time that is available with a person starting from the due date of filing of annual return for a particular year within which the show cause notice can be issued by the department. Now, 4 years and 6 months is the time limit for issue of show cause notice. If they don't issue the show cause notice within 4 years and 6 months, then it will become time barred. They cannot issue a show cause notice. Then there will not be a order within 5 years is the challenge. Hence, if we calculate the time limit by which the department has to issue show cause notice if they are invoking the provisions of section 74 would be these. That is, for 2017-18, it should be 31st of July 2024. For 18-19, it is 30th of June 2025. And for 19-20, it is 30th of September 2025. And for 2021, it is 31st of August 2026. Within this time, show cause notice has to be issued. If the show cause notice is not issued within this timeline, order cannot be passed within the overall timeline of 5 years. In other words, if it is not issued within this period, there cannot be any demand on the taxpayer. The department will lose in terms of period of limitation. So this is one key element with respect to section 74, where the time limit generally is 5 years, but needs to be read in the context of two subsections, 74.2 and 74.10. On the other hand, when we look at section 73, now section 73, as I said earlier, is envisaging a scenario where there is no mens rea. So in that scenario, how do we go about calculating the time limit? Now, section 73 says the order needs to be passed within a period of 3 years. 3 years from when? The same starting point, the due date for filing annual return. That is from where we need to start this 3 years period. And the section further says that there has to be a show cause notice, and the show cause notice should have been issued at least 3 months prior to the expiry of the 3 year, which in other words puts us in a spot of 2 years and 9 months. Within that time, the show cause notice should have been issued by the department, which takes us to these dates. For 2017-18, ideally, this 2 years and 9 months should have and would have elapsed on 31st of October 2022. As we had the benefit of COVID-related extensions, July 2022, by invoking the powers vested under section 168A, notification 13/2022 was issued. By virtue of that, this time limit was extended. That is, the time limit within which they can issue the show cause notice was extended up to 30th of June. So technically, they can pass an order up to 30th of September 2023. That is how the extension was. 31st of March 2023, the department officers would have further felt that this time extension is not enough for them to complete. Hence, that was extended further. A second extension was given for 2017-18, and for 18-19 and 19-20, first extension was given on 31st of March 2023, which now makes the time limit within which the show cause notice can be issued by the officer for 2017-18 under section 73 is 30th September 2023, and for 18-19 it is 31st of December 2023, and for 19-20 it is 31st of March 2024. So once in 3 months, starting 30th September, every 3 months we will see expiry of 1 year with respect to section 73. Hence, now you would have realized, or already, if this timelines had been discussed, you would have realized why there is a barrage of ASMT 10s, notices, audits, and there is a push by the departmental officers. Though the audit has been ordered for 5 years, there is a push or a request to complete at least 17-18 and 18-19 first. The reason is they will have to go through the adjudication process. Hence, to start the adjudication process, you have to first complete the audit. You should be able to start the adjudication process post then, which is applicable in case of the other assessment related proceedings also. So that is the reason for all these timelines. And interestingly, I am trying to guess the future. Why? Because look at 30th September 2023 and department has given a time up to 30th June 2023 for those who have not filed their GSTR 9 and 9C or GSTR 9 alone for the past years to come under the amnesty and file with one-time late fees of 20,000 each per year. So that they allowed from 1st April 2023 till 30th of June 2023. Now that has been extended to 31st of August 2023. So the 31st of August 2023 timeline subtly indicates to me that if an assessee chooses to file GSTR 9 on 31st of August 2023, post that only he is picked up for audit, or he is going to use this annual return as a safeguard against audit. Where department audit proceedings are initiated, they are finding out something which I want to regularize by filing an annual return. I think department will have very little time, which is exactly 1 month, to issue the show cause notice from 31st of August till 30th September. Hence, I am of the view for 17-18 and 18-19 at least, there is a possibility of further extension. But notwithstanding that, that is only for the departmental officers. As and when possible, we must push and try and complete. While I say that, why I am saying this is, I don't practice income tax. So I readily tell people, come, whenever we have a problem, we will solve it immediately. But there might be those of you who are practicing income tax as well. You are staring down the due date on 31st of July. So if you feel that, no, how am I going to complete this? Then I'm giving you whatever little comfort that can be given in an online session by saying that you can reasonably be sure that there will be an extension from the department side. Now there is a question asking as to within what time the department has to complete the audit. That is another interesting point which is left to open in section 65. They have to complete it within 90 days. Now the point is, when they have to complete it, what they say is once they have received all the data that is relevant for the purposes of their audit, within that time they need to complete. But what is receipt of all the data? What generally happens when we receive an ADT1 is we tend to give most of the data, if not all. We tend to give most of the data, the annual returns, the tax audit reports, the submitted company law related documents, TDS reports, 26 AS, all that we provide. Yet they would say, no, this information is required. For these ledgers, you give me the breakup. So those are the things which will concurrently happen, which we'll be providing to them. So if there is going to be a very strict officer who says, no, you submit everything, then only I start my audit, he can take it from there. There are people who say, no, you keep on submitting, maybe in a month's time we will complete. Yes, they can. So the key word which makes it interesting and one-sided for the department officers is that once all the data that is required has been received. Now, what is all the data or all the information is not defined, and that cannot have an end also. They can ask anything. They can start with the financial records to the backup documents like purchase orders, the suppliers data. Now, where is it going to end? So I cannot be providing all the data is the common understanding, but legally that is from where the time limit can start for the departmental officers to finish the audit. And rest assured, when they start the audit, especially if it is CGST across India, it is the same process. They will try to bulldoze it as quickly as possible, and every month they will have the list of audits which they want to push for this month. You just need to find out from them which month they intend to push you. Accordingly, we can prepare and give the data for them to complete the audits. And I have seen situations or cases where the audit officers exited the premises in November 2021, giving a very, very damaging DRC 1A. DRC 1A they gave, they did not give ADT2. They went ahead and 3 points of that audit report they kept pending. They placed it in the committee meeting again 6 months later in June 22 without giving ADT2, further enhanced the demand with respect to those 3. We fought the case, we went, meaning it is not a case per se. We took up the matter with the audit commissioner, with the principal commissioner. We went around for about 1 year and 6 months. In this month of June, we have been given the ADT2. So this can also happen because the demand that was raised by the officer was in the vicinity of 50 crores, which was not even there. But that is what the officer has done during the audit. which resulted in a lot of explanations to be done to the departmental officers and bring it down ultimately. And one of the thing was cross-charge versus ISD, which has now been conveniently clarified by the department. But we had to go through this whole, say, 17 months struggle to convince the officer to come out of it. Hence, if you think audit can get over within this time, certainly not. Depends upon the complication, more dependent upon the audit officer. If he intends to make it complicated, it can. Now, moving to the next part of our discussion, which is more with respect to this discussion on the time limit. Now, this discussion on time limit, I am going to discuss mainly not from the time limit perspective, because post this there have been amendments, so which I have already discussed. My concern or the key element from this particular discussion is section 73 or 74 talks only about 4 things. What are those 4 things which can result in a demand and a recovery? 1, there has to be a non-payment of tax, or there has to be a short payment of tax, or there is an input directly pertain, or the first 2 directly pertain to my output tax liability. The third one pertains to my input tax credit, which is wrongly availed. Yes, able to understand, and these are all forming part of our monthly returns. Now, the fourth one is erroneous refund. I have specifically put the fourth one separately because in the eyes of section 73 and 74, this is how it looks. It does not consider all the 4 in the same basket. It wants to consider the first 3 in a separate basket and the fourth one in a separate basket, especially from a time limit perspective. So the 2 years and 9 months, which we discussed earlier, now if you look at it, the 2 years and 9 months is going to be calculated from the due date of filing of annual return. I've taken an example of 2017-18 without worrying about the extension now. So it should have ideally gotten over by 31st of October 2022. But for erroneous refund, the 2 years and 9 months period should ideally be commencing from the date of erroneous refund. Now, this is more disturbing from the department side. From our side, this is very important to note as and when such an adjudication is taken up. Either there is a suo motu notice by the department saying there is an excess tax that is given to you as refund, or in pursuant to an audit or an inspection, department comes up and says these are erroneous refunds, where we need to look at the timelines. Of course, if they take it under section 74, that will be 4 years and 6 months. If they bring it under section 73, it is going to be 2 years and 9 months. The 2 years and 9 months does not start in case of erroneous refund, unlike all the other 3, from the due date of filing of annual return. It starts from the day the erroneous refund was given. Take, for instance, December 2017, there has been an erroneous refund. The 2 years, 9 months period is long gone. The 4 years and 6 months period is also getting over. Hence, there won't be a possibility to invoke that period, even under section 74 with respect to erroneous refund. Is what is the main purpose of discussion of this 4 into 2 categories, 3 and 1. Non-payment of tax, short payment of tax, ITC wrongly availed stand in a different pedestal as compared to erroneous refund, because the timeline, the start of the timeline is completely different, and it can result in some of the cases be providing the relief to the taxpayer, because when the audit happens, the department tries to invoke something. We can always say it is available in our books of records. So why should 74 be pressed? Why not 73? When they are, we can prevail over them to make them accept 73. So 73 will give them a lesser period of time from the date of erroneous refund, which may even make the whole erroneous refund claim by the department time bar. That is the reason why I said these 4 needs to be looked up from a different perspective. And as I said, the extensions have come and they are already in place. Now we will get into the adjudication process per se. I have tried mapping it as a process with respect to these 2 sections, 73, 74, and wherever required, I will pull in 75 and 76, read with rule 142. So this is what is going to be a discussion. I'll give a disclaimer. I have prepared it with respect to these sections alone, and wherever there is a legal conundrum or a legal battle, I will also be able to quote that and how that has been decided as well. Now, starting with the first process. So one process ends, the other process starts. As we would have all studied when we started CA, they would say that auditing starts where accounting ends, something like that, or finance starts where accounting ends, costing starts where financial accounting ends, whatever, something similar I want to quote. The adjudication starts once the intention by the department is communicated. So what they are supposed to do is, before a notice that they intend to issue, they have to issue a DRC 1A communicating to us what is it that they intend to collect as tax from us. Could be a non-payment short payment or erroneous refund, or it could even be a situation of ITC reversal. So the starting point is DRC 1A Part A. Most of the cases, it is issued online. In some of the cases, it is not issued online. Now, your experience might be different if you are in a different state. Because in the state of Tamil Nadu, where I predominantly do it, and also in the state of Karnataka, what I have seen is CGST notices are not system driven. CGST notices mostly happen manually. You get a courier, you get a letter, that happens. So DRC 7, I'm yet to see online for assessee who is allocated to CGST. Whereas in both these states, with respect to assessees who are allocated to the state department, we are able to establish this trail in the portal itself. The starting point could be section 61, scrutiny of returns, where there is an ASMT 10 resulting in a DRC 1A. Or, as I said the context today, from an audit, departmental audit, a DRC 1A can crop up. Or from the inspection of the department, a DRC 1A has to crop up. Hence, what I wanted to communicate in this first point, more importantly, is something which I was also discussing with our beloved friend, Mr. Shubham, before the start of the session, where when there is an inspection by the department, generally the inspection by the department tends to be a collection exercise. In other words, before they leave the premises, they would expect a tax to be remitted to the department, unless and until you are served with a DRC 1A, converted into a show cause notice, or where you are convinced at the DRC 1A stage itself that, yes, I am liable, I would suggest never to pay the tax. The reason being, paying a tax at that stage itself would mean two things. That is what I told you earlier, that there is a legal conundrum which was created, which has been struck down by the High Court of Kerala way back 2 years back, where they stuck it down. I think 1 year back they stuck it down, wherein the point of contention was the assessee had paid the tax under GRC 03. Of course, that was a case of e-way bill. So there is another judgment in case of Gujarat High Court, where it was more with respect to the inspection undertaken by the department. In both the cases, what I wanted to stress is, when the department ends up on an inspection, it is not mandatory that the tax needs to be paid on the day. Whereas I also would want to convey that if it is a known demand which has been missed, which I get to know only from the officer's mouth, and I just do my reconciliations and I find that, yeah, it seems like it is payable, then it is better to pay. Why? Because section 73 and 74 have this discount process, what I popularly call as discount process. Again, though it is an advanced study course on GST, I would want to apprise on this rudimentary part, pardon my repetition. If it is section 73, if a DRC 1A is issued, I don't pay the tax. They will convert it into a show cause notice. I don't pay the tax. They will convert it into an order. They will charge me 10% penalty, or 10,000, whichever is higher. What is the procedure that I can reduce my penalty? They give me DRC 1A, I don't react. They give me a show cause notice. Within 30 days from the show cause notice, if I pay the tax along with interest, zero penalty. But this is a notice or a proceedings initiated under section 73. On the other side, if it is a proceeding initiated under section 74, what happens? If it is initiated under section 74, DRC 1A is issued. I don't pay the tax. Nothing I pay. Comes to the next level. Show cause notice, I don't pay anything. Comes to the order, I don't pay anything. Now, I am liable to pay a penalty of 100%. So there is a tax, equal amount of penalty plus interest. How can I save myself this penalty? Of course, yes, 74 gives me that benefit. If before even the SCN is issued, you are able to pay, then 15% is the minimum penalty. On the other hand, within 30 days from the date of issue of show cause notice, if you are going to make the payment, what happens is the penalty quantum increases, but overall penalty is lesser. That is 25%. That is 30 days from the issue of show cause notice. If you manage to pay the tax, interest, and the 25%, you will be left with 25% penalty only. You will not pay the full penalty. Further, you don't pay in this 2 steps. You come to the order. Within 30 days from the date of order, we go and pay the penalty. We need to pay only 50% of the penalty. Failing all this, we need to pay 100% penalty. That is why I said the exercise of discretion matters. So DRC 1A to DRC 1, what is the big deal? The big deal is if it is under 73, no big deal. If it is under 74, 15% is the big deal. So DRC 1A is issued. We forgot to reply. They have made a show cause notice. I'll give a reply. I'll get it completely dropped by the officer. Then fine. No, he is not dropping. Then get ready. 15% penalty is also accruing. It will become 25% because 15% is what you would have got away with. Now that will become 25. 10% additional penalty is what you need to pay. So please be mindful of this DRC 1A, DRC 1, DRC 7, which is why I said I'll take you through that process with the help of these 2 sections and the rule. What happens is that once the DRC 1A is issued, we need to give a reply. The maximum time that can be given by the department is 30 days is what they generally give. But within the same, they can give a shorter time also. They will give a 15 days time. If you want, you can seek further time from the department to furnish the reply. I have seen situations where DRC 1A is issued for even 2 or 3 months. We have sought time because of the quantum that is involved. So the officers are lenient to the extent because they don't want to pass an order, a non-speaking or an order against the principles of natural justice. Hence, our reply has to be registered. Again, if it is a portal-driven notice, though you may submit the documents physically to the officer, please ensure that it is also uploaded in the portal, because we have had instances in the past where the non-submission in the portal is considered to be a non-submission totally, though it is submitted physically to the officer. Though the officer has physically received it, he denies it, and we were in a receiving end. Hence, DRC 1A, if it is driven online, upload everything online, also submit if the officer intends. He says, no, everything online is submitted, I am fine with it, leave it at that. So DRC 1A part B is where we give our reply, either accepting or partially accepting or completely not accepting their proposal of DRC 1A. Once that is done, now the department will go to the next step, which is to give a show cause notice. So the typical show cause notice process starts here. The prior 2 steps are courtesy, canon India judgment. So when it starts, the show cause notice, generally, which are sections would trigger this? As I said earlier, section 73, 74, yes, of course, section 76. At this juncture, it is also important that I bring in that discussion. Maybe I'm not sure whether it is already discussed. Any tax that is collected without the levy does not matter, but any amount that is collected in the name of tax has to be remitted to the department. So even if I am going to not call it as tax, or there is no levy, there is no locus standi for me to collect the tax. By mistake, I have collected. I cannot refund it to the person from whom I collected it. I have to remit it to the department. The erstwhile central excise also had this provision under section 11D, which is carried forward in section 76 of the CGST Act or the corresponding SGST Act. So 76(2) can also be the provision under which this show cause notice is issued. And once that is issued, a summary of payable shall have to be issued in DRC 01. This is where there is a slight digression, but which is good for the department, is that where the matter remains the same as to what is there in the show cause notice. Further years are included, then the department may do so by issuing a DRC 02. Rarely we have seen, in fact, I would say online I have never seen in DRC 02, offline I have received in one case. But mostly we do not see this DRC 02, but there is a legal provision provided for it. Provided there is already a show cause notice DRC 01, an addendum kind of thing can be this DRC 02. Fine. Now the decision making process comes in where I feel that, okay, let me pay this tax. Before giving the show cause notice or the statement, I want to pay this tax, or at this juncture, I want to pay this tax. I can pay by using DRC 03. If I am paying it before the show cause notice is issued, then the officer is supposed to acknowledge my DRC 03 with DRC 04. A very, very important offset process which has not been done by the department in most of the states. And suddenly there is a spurt of information sought by the tax officers from the assessee, asking them, give me the list of DRC 03s and put the reason against that and give it to me. We have already put all the reasons in the remarks column of DRC 03. Yet they want it because they want to acknowledge those receipts. Once we file the DRC 03, we'll only be able to see that pending for action from the tax officer. It is remaining in the same status for about 3 years now. So when will he act? When will he take an action? He should have ideally acted, because now the department has got to know that some taxpayers, whenever they ask, they say, I have already paid it through DRC 03. For any year, they say, we have already paid it through DRC 03. They also accepted, but later on only they realized that one DRC 03, they are showing it for all the years. So the department officer came to know, okay, I'm thinking that he has already paid, but he has not paid for all the years. Same DRC 03, he is showing it to me repeatedly. Hence, had this process been followed by the officer right from day one, we wouldn't have had an issue now. But there is an issue, so department officer, at least CGST officers are running behind. The assessee is asking them, give me the list of DRC 03. Also give me the reasons. I will issue a DRC 04 had it happened like this. No, it did not happen at this point of time. It happened a little later. So I pay the tax within 30 days from the date of issue of show cause notice. Still, I can do it under DRC 03. The form DRC 03 remains the same in case of voluntary payment, whether it is paid before show cause notice or whether it is paid within 30 days of show cause notice does not change. But the form in which the officer has to acknowledge the receipt of money changes. I have filed a DRC 03 on a notice, or even before giving off a notice, I have filed a DRC 03. He has to give a DRC 04 acknowledging the receipt of the money. Whereas within 30 days from the date of issue of show cause notice, if I am going to pay the money through DRC 03, the officer has to acknowledge it by way of issuing a DRC 05, communicating to me that he is concluding the proceeding. So whatever show cause notice has been issued will be dropped, and that is what will be communicated through this DRC 05. If that is also not happening, that is the taxpayer, on the other hand, like I said earlier, makes use of the discount scheme under section 73 or 74, where the lesser tax has been paid. The assessee has to make a representation to the tax officer in DRC 06, requesting him and communicating to him that within the specified time, I have paid the tax interest, if applicable, the relevant shorter penalty. Hence, please drop any further penalty that you might have raised. Why this DRC 06 or a requisition becomes important is that whenever there is an observation by the officer, he wants to take it under, let's say 73. You end up paying the tax, you end up paying the interest, but you do not communicate to the officer. You pay it through DRC 03, yet you need to communicate to the officer saying, I have paid it before. Then he will not even convert it into a show cause notice item. If it is a show cause notice item, then you make the payment. If it is online show cause notice, you choose the show cause notice and make the payment. System will help them. If you don't receive the notice, show cause notice through online, if it is an offline show cause notice, then we are running the risk. The risk is that the officer will confirm the full penalty. But what we will be expecting is, since I have paid within 30 days of show cause notice, I should be charged only a lesser penalty. But that may not happen. Hence, this representation to be given to the officer under DRC 06 is very important if we want a lesser penalty from our end and make use of the benefit of lesser penalty. And then the department, that is, if you are not paying, show cause notice is issued, department is not accepting our reply to the show cause notices also, or when we have not replied at all, in that case, department can bring the matter to rest by passing an order, and that order will be accompanied by a DRC 07 statement, which in other words is the notice of recovery. Already recovery related provisions would have been discussed. As per that, the recovery provisions, 3 months time is given. That 3 months time, which is generally the appeal timelines. So the starting point for the recovery proceedings is this DRC 07. What can happen beyond this is, I see that there is an element of this order which needs to be rectified. Can I rectify this? Yes. If it is a mistake or an error that is apparent on the record, it can be rectified by the proper officer by issuing a DRC 08. I wanted to share a practical issue which we encountered, which we could not proceed further unless this rectification could happen. What had happened? DRC 1 was issued, assessee did not reply, meaning the concerned person did not reply. It came to show cause notice, it came to order also. They did not do anything. Now they came for appeal. They said, why don't you file the appeal? Interestingly, what had happened, the assessee is a dealer in tobacco. So the mismatch that is cited by the officer with respect to 2A versus 3B was in all the heads, CGST, SGST and compensation cess. But somehow, while adjudicating, the officer had seen only the total mismatch. And generally, they don't deal with cess-related taxpayers. Hence, what the officer had done, he had given an order confirming the difference of tax as liability split between CGST and SGST. But actually, the demand is not to that extent in CGST and SGST because it is a tobacco product. The higher demand or mismatch is only with respect to cess. Now, could I have gone for an appeal? Yes, but then I'll be in trouble because I need to pay 10% of this. Where I'm telling them I need to pay 10% of the cess, but there is no demand of cess at all in the order. So those are the kind of scenarios which can occur immediately, be represented to the officer. And if it is going to be an online order, there is a provision to seek the rectification in the online method itself. If it is a manual order, it has to be the manual request or rectification of the order so that that order becomes a proper order for further litigations or appeals. Hence, this rectification request can be given. If the officer intends to do the rectification, yes, of course, he can do it. And the DRC 08 is what we'll be seeing as the revised order document. Now, when I'm just going to take you through the overall contents, not each and every line. Now, DRC 1A typically is this, wherein whatever that the tax that they have ascertained, which they feel that we are liable to pay either under section 73 or 74, that would be communicated to us through DRC 1A. Legally, I wanted to stress, if it is a recovery or a demand created under section 76 subsection 2, we won't see a DRC 1A because that is not a collection of a tax. That is not a demand for a tax that is levied or leviable. It is an amount which is collected as tax, but which is not backed up by levy that is being collected. So for any 76 related proceedings, DRC 1A may not be there. Whereas on the other hand, 73 and 74, yes, DRC 1A will be there along with the along with the first instance of discussion with the department, and when we discuss about adjudication, which I wanted to take up is the legal provisions first. As per that, one very important element which I wanted to convey. The other one, of course, would have been discussed in the other sessions as well. The important element that I want to convey is that whenever department issues a notice under section 74, deeming that there is a culpable state of mind, if we are able to prove that it is all from the documents and records which are already submitted to the department and it is already reported by us, and from the scrutiny of that only this conclusion has been reached, there is no question of section 74. If we break, then automatically the notice that is issued under section 74 becomes a notice issued under section 73. The reason is that if the 74 notice is converted into, we'll have to go back and issue a notice under section 73, which is not something which the government is comfortable with, and from the past experience they have already done it while GST law was enacted. Hence, a notice under 74 can be completely dropped, or if it is proved that it is not 74, it is 73, then that notice is still a valid notice, because though issued under 74, now that we have managed to convey that it is under section 73, so we can say that section 73 is the relevant provision. So as per the section 73, the timelines will work. As per section 73, the other proceedings will happen. So the other element which I said is not as key as this, but which is also a key provision with respect to the adjudication process. Any kind of stay that is taken either from the court, and currently we don't have a tribunal, so it is only from the court, that is taken. The time period that we discussed earlier, the 2 years and 9 months, 4 years and 6 months, all that calculation purposes, this stay period will be excluded. Excluding that only, the time limit will be calculated. So the stay is going to continue for 4 years. We cannot wish that 73 provisions will not be invoked. No, 4 years will be excluded for calculating the time limit of section 73. Now, quickly moving into the other part, which, okay, before I do that, I'll just answer, I think, 2 or 3 questions which we have in front of me. Okay, after submitting reply against DRC1 liability, how much time taken by the department to reply? If it is DRC1, generally what happens is department DRC1 is show cause notice. So they can convert it into an order giving the reasonable time. So DRC1, when it is given 30 days time limit is given, 30 days time we reply, they are convinced with it, they can drop it or they can confirm it. There is no specific timeline for it. Whereas only when we look at section 73.2 read with 73.10, the overall time limit only, we see that there is a gap of 3 months between the show cause notice and order, but that is not required in a normal scenario. That is when it is given before. If we have not paid the amount in DRC1 but submit the reply and clarification online by replying DRC1, in how many days we get the reply by the GST department? DRC1, as I said, I think I've already discussed that point. So the next one is, we have received a show cause notice in 2021. I'm not able to see the full query, it is slightly longer. Yeah, now I'm able to see. We have received show cause notice in 2021. We have paid all taxes and filed the returns 2019. We represent the department imposed 100% penalty. So no tribunal in AP. We filed in court. We filed late return in 2018, March to August 2018. In February 2019, SCN is issued after payment of 5 crore. Adding with interest and late fee. Okay. Not able to understand your question, sir. If you can post the question.
Yeah. The question is actually 1 minute. My CFO will speak.
Hello. Sir, good afternoon, sir. This is Mohan Krishna. We actually, from March 2018 to August 2018, we have not filed the returns.
Okay.
That is the first point. In August 2018, 11th of August, October 11th, investigation department has visited the premises. Before the investigation department coming to the premises, on October 8th, we filed March return. So they have taken all the papers and all, and they have arrived the taxes as per my books of the accounts, which is in tally. And they issued the show cause notice in 2021 saying that under 74 read with 122(13), 100% penalty. We went for appeal. In appeal also, they said they have not agreed, and they said the adjudication order is okay, you have to pay. Now we filed in the API court. This is the case.
Sir, I would say only two points from my side, sir. One is whether the 100% penalty invoking is right or not is the argument that we need to more press in the High Court.
Yes.
Because
Yes,
you have not filed the return. Maybe you had a financial difficulty in filing the return, and whatever they have assessed
Yes.
were already from your records. Take it from that angle and see whether 74 can be struck down there. So that is the most important element. If that can be done, I think automatically the quantum of penalty will come down. Of course, interest will be there. Interest is something which is omnipresent, which we need to pay. So
already
that is,
we have paid along with interest only.
okay. So you have
By
paid
the
along with
ma-
interest.
Yeah, we paid returns along with the interest and late fee also.
Then it is all the more reason for you to take it to the next legal forum, which is the High Court, where this will be viewed in your favor. Because you are not afraid to pay the tax, you didn't have the financial wherewithal to pay. But subsequently, you have paid the tax along with the interest and the late fees.
Yeah, yes.
Penalty
Yes,
is the
yes.
bone of contention.
Yes, sir.
So 74 needs to be contested, sir. If that can be done in the court, yes, you will have a relief, certainly.
Is there any way out for 74 from the court?
Depends upon the case to case, sir. So we need to look into the scenario and say whether there was an intention to evade a tax. That is the
That's
basis.
what. Intention, I want to tell you one thing. On October 11th, this department person has visited. 2018, October 11th, department person, investigation person has visited the premises. On October 8th, I have filed my March return. I have
which
filed
means
my
that you are
March
conveying
return.
that I
March
already had the
return.
intention only to comply. It was not.
I am saying that if I have intention, why I will pay in March return and October 2018?
Correct.
You have come
From
on
what
11th.
you say, from what you say, I'm able to appreciate the fact that there is no intention to.
That's what.
From the government, you need to go through the remaining parts of it, which I think we can take it offline. Now, for the purpose of limited purpose of a discussion, yes, there is a merit which you need to further pursue. Yeah. Now, with respect to the other general provisions, when it comes to determination of tax, any reference made by the court or the matter is remanded back within 2 years. From the date of communication of order, the order has to be passed by the officer. On the other hand, the opportunity of being heard is a natural opportunity which has to be given by the department. They cannot deny it unless the assessee himself has waived the show cause notice, waived the personal hearing. Yes, they cannot.
That's what my question is, when we have paid only 1 minute, sir. When I have paid taxes, everything exactly before the time and everything, why they have imposed under sections 74 read with 120-13? That's what my question. 100%
Very simple,
penalty.
sir. When they come under section, I'll tell you, sir. When they come for an inspection under section 67, like our marketing teams which have a target, department officers are also having a target. So to meet the target demand, they will impose only section 74. As per that, they will impose only 100% penalty, sir.
Okay.
So nowhere the department is going to say that you are a very genuine person, but I still came for inspection. That is the reason, sir. And that is why we try to fight and come out of it.
And one more thing, sir. When they have, okay, I do agree with your point also. Whatever their market target, that is no problem. Even though they say that we have arrived at tax liability from the books of accounts, they have written in the show cause notice. When they have
That's
written
why
in
I'm
that
saying,
much
sir,
blindly,
that is why I'm saying you have a merit, because they did not arrive by way of a best judgment method. They arrived only
that's
from
what.
the records.
Yes,
So that
yes,
is why you
yes.
will be able to prevail over in the higher legal forum. If you can, this documents can be proved that they assessed
Okay.
me only from my records. So where is the question of evasion or
Escaping the tax. Yeah, yeah.
Okay, sir.
Okay.
Let's
Okay.
proceed with the discussion.
Okay. Okay.
The proceeding, as I said
Once-
earlier, has to be granted unless the assessee is waiving it off, and then a maximum adjournment of 3 times can only be given. Again, I have started seeing a new trend in the department when they, even if it is PH for show cause notice, what they try to do is they put 3 dates in one notice for hearing, where they put 27/14/next 21. They put it like this. I thought, okay, they want me to come on any one of these days. I went on the third option, 21st. So the deputy commissioner was asking me why you did not appear for the earlier 2. I was like, why should I appear? You only gave me an option. She said, no, it is the 3 times that I have allowed you. Though it is coming in one notice, that is considered to be 3 separate dates I have given you. So you didn't appear in the first 2. You have come only in the third one. I will not give you any adjournment. I said, fine, you don't give me any adjournment. You were able to prevail over her in the case. But that is another development which the department is doing. In a way, that is good, because they are trying to comply with the legal provision as quickly as possible. The next part is the whatever that the officer intends to collect. The fine line between an assessment and adjudication has to be clarified. In other words, for example, if I am taken for audit by the department and in pursuant to the audit, department officer finds out that there are certain elements of mistake. Let's take the common and most beaten discussion. The GSTR 2A versus 3B. He finds it out 1718 to 2122. He has quantified, and now he says, I want to have the difference reconciled, or you give me declarations within 1 week. Else I am submitting. So today he is telling me that else I am submitting on 27th. Management committee, MCM is there. In the committee meeting or the congregation meeting, I am going to submit the file, audit file, and say this is my observation. Before that, I will not be able to get all the declarations from my officer. So what I will do from my supplier's office. So what I'll do is I'll tell them, okay, sir, fine, you complete the audit. So he completes the audit. He has assessed the difference as tax, or difference as my liability. Let me put it that way. He has he has identified the difference of over-availed ITC than compared to 2A as my liability, and he has sent it for the next level adjudication. Now, in the adjudication, what is assessed by the officer is not wrong. What I am trying to tell to the adjudication officer is that, sir, he has done this. Now, what I want to do is I am accepting that difference, but consider all these documents that I am providing to you. Go through the documents, because you are my jurisdictional officer. He is an audit officer who comes once in a while. So now to the jurisdictional officer, I am providing you all the documents. Go through these documents, declarations I am providing to you. Go through circular 183, circular 193. Please provide me relief. This is what is adjudication. So the assessment happens at one end, the adjudication happens at the other end, which is popularly happening in 3 of the situations which I had highlighted earlier: inspection, audit, vehicle interception. That is where the clear line between assessment and adjudication emerges. If my proper officer itself is going to do through an ASMT 10 procedure under section 61, then subsequently converting it to 73, the assessment and adjudication happens with the same officer. But the processes are different. He identifies the liability, communicates to DRC 01, assessment. From there, adjudication commences. All the relevant facts that are there in his mind needs to be communicated in the notice as well as in the order. And the very, very important key thing, which even some of the officers are not able to fathom, is that interest liability as per section 75, whether it is mentioned or not in the order or in the notice, interest is payable. And in fact, for interest, there is no question of limitation. When the tax is accepted and paid, interest automatically needs to be paid as well. And the basic rudimentary rules of any notice, the order cannot have more than what is there in the notice. It can only be confirming it, or it can be relieving us out of some of the demands that are proposed in the SCN, but not increase. And further, section 76, I want to focus on the other processes. Section 76 and 77 we'll look at quickly, and then maybe we will get into the practical aspects of some of the adjudication related issues, and then yes, open to questions and answers. Now, section 76, as I said earlier, is a unique section where the taxes which are levied are not being collected by the government. 76 is a situation where the tax which is collected by the person, that is, he is collecting it in the name of tax, but it is not a tax backed by a levy at all. In those cases, section 76 starts with the legal non-obstante clause saying that it overrides any of the provisions of this act or any order or direction by any court or appellate authority. Anybody who collects any amount as tax must remit it only to the department. He cannot give it back to the person. I have collected by mistake. Still, you have to remit it to the department. Maybe he can come and claim it as a refund. Now, this is very, very important when we see a parallel or a analogous provision. Section 11, which discusses about exemption, also has a provision to convey to us that when it is exempted and it is an unconditional exemption for a product, we are not supposed to collect tax. Why they have put that in place, deterring us from availing the benefit of not being exempted. Meaning, I want to artificially collect tax for an exempted product. Why? Why would I do that? Because I would want to enjoy the input tax credit. So I might say, sir, you have given exemption, but I don't want exemption. I will continue to pay tax. I cannot say that. So that is where section 76 and explanation to section 11 have a correlation, which brings out the fact that if I am not supposed to collect, I'm not entitled to collect. If I collect, 76 will come into my doorsteps, adjudication. I need to pay the demand pursuant to section 76. So the penal provisions, what is applicable to 73 and 74, can also be invoked for the purpose of section 76. Of course, here there is no question of a tax liability, but it is an amount that needs to be paid to the department, and the timelines that we had discussed earlier, which are specifically applicable under 73 and 74, is not applicable for 76 because here it is not a tax that is being collected. The amount that is collected as tax is going to be only collected. Hence, the time limit is the overall time limit. There is no time limit, but the time limit is mentioned only between the show cause notice to the order. From the date of show cause notice, the order has to be passed within 1 year. So if you have collected by mistake some tax, never returned it, never paid it to the government, even after 10 years, they can come and seek that amount by way of a show cause notice. And from the date of show cause notice, within 1 year, an order needs to be passed by the department. So 76 is one such sleeping devil kind of provision, but not for people who are paying the tax. In other words, people who are collecting something as tax, but paying something else as tax. For them, this can be a real pain. Majorly the B2C players who actually play with their liability, issue multiple invoices, but report only a part of those invoices as their output tax liability, can land in such trouble. They can land in 73 and 74 itself. Still, if they miss 74, yes, 76 is there to take care of them. And then quickly on 77, this is mostly arising in terms only when the audit happens by the department or whenever there is an inspection as well. But inspection generally does not take much of care into section 77 because they know ultimately there is no tax liability. How it works is when I am liable to pay CGST and SGST, I ended up paying IGST, or other way around. When I am liable to pay IGST, I ended up paying CGST and SGST. Once this is identified by the officer, what is the next logical steps that can be taken by the officer is, of course, there is a three-step process prescribed under section 77 of CGST, read with section 19 of IGST, which says 1, pay the correct tax; 2, claim the wrongly paid tax as refund; 3, there is no question of interest because you have already paid the tax, and that is the reason why I said this will mostly come up during audit or in some of the cases under refund scenarios, but certainly not during inspection because they know for a fact that there is not going to be an additional liability arising out of this, additional collection that is going to arise out of this transaction, but may occur in that scenario as well. Now, the relevant rule and the provisions or the procedure prescribed for such a scenario covered under section 77 related adjudication is that there was a confusion running for a long period of time, which is, for example, 2017-18. The audit is happening today. The audit officers are telling me that in 17-18 you have paid IGST, but actually you should have paid CGST and SGST. I accept. Now I go and pay the CGST and SGST. What happens with the IGST that I have wrongly paid? Because section 54 says within 2 years from the date of payment, you can go for refund. 2 years is long gone. Can I go and claim refund today? For that only, the answer has been given by the circular where they have clarified when it is subsequently held as wrongly paid. That is, I paid IGST, but subsequently only. Now only they are saying that you have to pay CGST and SGST. And now I am paying CGST, SGST means from today, within 2 years, I can claim the wrongly paid amount as refund. This is even more important from a revenue settlement perspective with the union government's settlement to the state governments, because this can give rise to a different settlement cycle, but legally it is allowed. Hence, what we need to understand, I have paid wrongly in some earlier years, but today the department finds and asks me to pay the correct tax. From today, within 2 years, I can apply for the refund of the wrongly paid tax earlier, even though it might be older than 2 years. That is what is the beneficial part of this section 77 related adjudication, which one needs to keep in mind. And for the earlier periods, they have already said this circular was given in September 2021, and from there they have mentioned that anytime before this September 2021, had you done this by September 23rd, 2023, you could have gone for refund. And in future, anybody does from the date of correct payment within 2 years, the refund can be applied for. So 76 and 77 are the fringe provisions of adjudication, which if it occurs to you, this can be of use. And now we look at the e-way bill related provisions. When we discuss about e-way bill related provisions, there are two step scenarios is what I want to take up more from an adjudication angle, because MOV1, MOV2, MOV3, all that happens when the vehicle is intercepted, where they come to a conclusion that there is something in the in terms of documentation or the methodology in which the movement is being done, which is against the provisions of section 120, section 68, read with section 129, attracting a penalty under section 129. Then what the department can do is issue a show cause notice in MOV7. 98% of the cases, it is manual. Very few states I'm able to see that the show cause notice is also automated or it is coming from the portal itself. So MOV7 is given to me, show cause notice. The adjudication process starts. And typically in most of the states, in the southern state that I have seen, including Uttaranchal, where is one of the cases where what happened is the officer who intercepted the vehicle is completely different from the officer who is adjudicating. So the officer who intercepts the vehicle issues the MOVs that are required for taking your vehicle into his grasp and transfers the matter to the adjudication officer with a recommendation that a show cause notice may be issued. So the adjudication officer issues the show cause notice, basing his conclusions on the recommendations of the officer who intercepted the vehicle. And again, 99.99% of the times, this e-way bill related interceptions are done by state officers. Once one of my assessees had a very strange interpretation, which is worth to remember as well. He said, e-way bill, there was a case, I was asking him, e-way bill, you have been caught. Yes, sir. Then we were discussing for some time. And suddenly he said, sir, you see, CGST officers never come for e-way bill related matters. I told him, yeah, I generally tend to see that because these were the earlier days of GST, 2019 sometime. He said, see, the reason is they are called CGST, means C stands for computer. So they sit and do all the things in computer related things and they issue the inspection notices and stuff from there. They do desk review. Whereas SGST, yes, stands for street. So the SGST officers end up in the vehicle interceptions because they are more asked to do that, is what he told. But somehow that seems to be the trend. Most of the cases, the vehicle related interceptions happen by the erstwhile VAT officers who are now the SGST officers, whereas the desk review and the DGARM related matters are identified by the central officers and then communicated to the state officers, and based on their input intelligence only, this intelligence officers function. So somehow that is strange thing that happens, but at least in a way it is happier for me, because one database accessed by one person, interpretation is done by one person, execution is done by different people. That will save a lot of explanations. Now, coming back to this e-way bill adjudication process, once this MOV 7 is given, we are supposed to prove why we are not suffering from any of the deficiencies as envisaged under Rule 138. If I am able to prove that my movement is genuine, I am not lacking in terms of documentation, yes, the order can be obtained in my favor. If the order is not in my favor, still the order needs to be passed. Then only the tax payment can be made and the vehicle can be released. In either of the cases, the adjudication process, I would say for this e-way bill related matters only, is the tiny window of 14 days. MOV 7 to MOV 9, it has to get over within the timeline, is what is making it different from the other adjudications. And these adjudications, as I said, mostly will be manual. Slowly it is getting converted into computerized. We'll have to wait and see how far it will get computerized. Now, few of the key legal aspects which I wanted to convey and discuss as well is, in adjudication, please always remember the key thumb rule of principles of natural justice. I'm assuming most of you sitting there and hearing this conversation are chartered accountants. If you are an advocate, you would already know enough about it. As a chartered accountant, where I had a pinch or where I felt that I was short is what I'm communicating or I'm trying to share. Principles of natural justice stands the basic element in any writ. So what happens is, if it is a non-speaking order, if it is an order where assessee has not been given an opportunity, where the assessee had sought by way of a letter seeking additional time, nothing was taken into consideration by the officer and yet it was passed, we have a very solid case at a higher legal forum to either get it remanded back or seek justice. But principles of natural justice is what we need to make ourselves more acquainted with. Our accounting standard knowledge, our knowledge of income tax, yes, of course, I agree. And even in income tax, this principles of natural justice will step into play. And more from a GST angle, we need to know, because income tax has matured to an extent. GST is in the nascent days. It will take some more time for it to even cross the developmental state and then mature. Hence, in GST, look for that principles of natural justice, whether it has been followed or not. Opportunity of being heard, whether it has been given or not. Though it is sought, it is still not given, you have a solid thing, but prove. Have the documentary evidences to further your arguments and proofs. And the other points, that one is something which I discussed earlier. DRC 03 generally is called voluntary payment. What meets the eye is, it need not be voluntary, it can be other than voluntary as well, because most of the cases what happens is we pay through DRC 03, but payment through DRC 03 is not out of our own will, it is forced by the department. Hence, that can happen, has happened in many of the cases. So rest assured, if you pay by DRC 03, don't worry, you are still entitled to fight it as a case. Now, I'll explain the typical process happening through inspection and how that can be mapped to our discussion so far. When an inspection happens, let's say for 3 days, the moment it is over, the communication by the officer will be the list of problems or defects that he had identified. So the next minute, what will be expected from us is to make the payment. If not today, at least by tomorrow. This is because of the collection pressure. Now, let us look at the legal aspect. From a legal perspective, what has happened is the officer has stepped into my premises, had done an inspection, I have given complete cooperation. He has identified certain mismatches, or he has identified certain shortfalls of tax liability. That needs to be communicated to me. How it has to communicate? He has to communicate it through DRC 1A. So he has to go back, he has to make a case, he has to communicate the liability that he intends to collect from me along with the reason for collection. Unless there is a DRC 1A, why should I pay? Because DRC 1A is the requirement of law. So immediately on an inspection, should I have to pay the tax? Certainly not. Adjudication has to commence. Sir, I was forced, I did not have an option, else something bad would have happened, so hence I paid. no problem. Still, we can argue that the payment is wrongly made. Example, in one of the client case, department officers entered in their premises, ensured that they paid reverse charge GST even on salary paid to managing directors. They had paid close to 8 crores to managing directors over a period of 3 years or 5 years. They ensured that the reverse charge of 18% is paid on all that along with the interest. They convinced them to pay, they convinced or coerced them to pay, they paid. They went off. Department is now in a radio silent mode. Nobody is appearing. Nobody is ready to take it further. Now, when they approached me, the next step, what I did was to instigate the department to issue DRC 1A. Because now that they had come for an inspection, they have collected the money. They did not have any intention to issue a DRC 1A. But unless I contend that 2017-18 will become time barred by July 2024, I cannot let that happen. So when they made the multiple representations to the joint commissioners and ensured that they issued a DRC 1A, DRC 1A was issued. Now I had replied extensively to the DRC 1A, seeking refund of the money paid under DRC 03. So they are in a confused state whether to issue show cause notice or to drop it at that level. Now the problem is in their court. The ball is with them. This is what I have done, which again, as I said, practically is what we should also be looking at. Inspection does not mean that immediate tax payment. And we already have enough provisions in the law as well as the case laws to back that cash cannot be seized by the department. They cannot consider that as payment. So these are the things that one has to keep at the back of the mind from a legal perspective when we approach adjudication. Quickly on the final part of my discussion, which is the points that generally as chartered accountants, we are supposed to take care, but which we miss and ultimately end up in an adjudication without the ammunition that is required for completing an adjudication. One, the accounts and records. The accounts and records, section 35, 36, read with rule 56. What is it that we need to maintain? We need to know. And from rule 56, I've managed to derive and identify the list of documents or the records that one is supposed to maintain as a registered person. The production records, services supplied record if you're a service provider, and then the inward supply of goods or services register. There is a world of difference between inward register vis-a-vis input tax credit register. This has resulted in huge number of issues arising especially in the audit, where people have given purchase registers. With that, the department has done the 2-year reconciliation. In purchase register, everything that I procure will come, but in ITC register, only the ones for which I avail ITC will come. This basic distinction have either been not told to them or they themselves have picked up the data and done the reconciliations. So purchase register is completely different, whereas ITC register can also be there separately. So point number 3 and 6 can be in the same register, but it has to be clearly distinguished. Sales register, of course, yes, my output register. Along with tax liability, it can be there. Stock of goods records must be maintained. So the point number 4 and 7 can be maintained in the same register. My sale of goods and services or supply of goods and services along with my output tax payable and paid data can also be maintained together. Imports related data, be it goods or services, need to be maintained separately. Export goods or services, the data needs to be maintained separately. And then specifically my inward supplies on which I am liable to pay GST under reverse charge, that needs to be maintained. Rarely, but possible, my outward supplies on which I am not liable to pay GST, the GST is liable to be paid by my recipient at a reverse charge. That register should also be maintained. And finally, advance received and advance paid. Advance received, if you are a service provider, mandatory. You are liable to pay GST the moment you receive the advance. Hence, advance received register is important. Whereas, whether you are a service provider or a goods supplier does not matter. When you pay advance, especially to a person who is getting covered under RCM. Let's say I'm giving advance to my transporter. On that advance, they are liable to pay reverse charge. Not when he gives the bill, when he pays the advance. Hence, these registers, if we maintain in an adjudication, we will be able to prevail to the extent of correctness of data that we can establish from this. And if the data is picked up only from such registers, then we can always argue 73 is what is possible. 74 cannot be invoked by the department. So the care to be taken to ensure that the accounts and records to this extent are available with us. We can have our own formats, but over a period of time, standardizing that will help from a client perspective as well as from our office perspective, where people might change, but still they know what is the format in which the record have to be maintained. And the other probable areas we need to be keeping in mind is if an adjudication is happening, department can invoke the provisions of Rule 86A, blocking our input tax. Happens regularly. They ensure that we don't pay the tax through that, or they ensure that we don't pay tax at all using ITC. Can happen. So 86A, we need to be a little aware of when we are entering into an adjudication process. The other common problem area is 86B. So what can result in 86B? Moment we pay all the taxes using ITC, department would not even make the effort to take the next step to find out whether this person would have paid income tax more than 1 lakh. So we immediately say 86B is typical. Why did you pay so much of tax only using ITC? So 1% is payable. I have seen even show cause notices being issued directly saying you should have paid only 1% in cash. We can always look at the proviso in Rule 86B and clarify to the departmental officers. But this is the common pitfall when we do the adjudication, where this 1 lakh tax or the income tax savior can be there for your 86B. Non-applicability should also be kept in mind. And more, I would say towards the end, we have come towards the end of my presentation, where in adjudication, be doubly careful about interest. The plethora of mistakes that I have seen in interest has given me this whole slide. 50 subsection 1, 50 subsection 3, both have been amended retrospectively. Hence, I don't have an issue at all in discussing this, because right from 2017, what is the current provision? That is what is applicable. There is no 24% in the first place. 50 subsection 3, there is no 24%. So when I said this, even some of the officers asked me, oh, there is no notification to that effect. It has come as part of Finance Act of 2022, Schedule 6. To be very precise, Finance Act of 2022 is 151 page document or 152 page document. In page number 148 in Schedule 6, they have amended the mother notification 13/2017, not rate notification, CGST notification 13/2017. In that notification, the second serial number, which was 50 subsection 3, had 24% as the interest, which has been amended to 18%. But invariably in the adjudication, they demanded 24%. If that is the case, be aware of that. 1. 50 subsection 1 also, where we need to be careful is some of the cases, the ignorance of the officer can backfire to us. For instance, the officer was hell-bent on saying, you have paid the old liability using ITC, you don't have to pay interest. I had to go in the opposite direction and tell him, no, sir, I have paid earlier liability, not disclosed in the return. I have used ITC to make the payment. I have made the payment of tax using ITC, no denial. But the liability pertains to September. I am paying it in April. How can I say that there is no interest? He is saying, no, you are not liable for interest. And he was ready to pass an order without any interest. I pleaded with him to tell him that I am liable to pay interest. Why should we do this in the first place? Don't ever think that moment this officer is satisfied, this matter is going to rest. No, certainly there will be a review within the department. Second, there will be a C&AG audit. Pursuant to the C&AG audit, 3 years from now, there will be a notice seeking interest, where we would have thought everything is closed, taken the fees, forgotten about the client. The client will come and say, had you told me on that day, I would have known. So let us exercise that professional diligence there. Even if the demand from the department is going to be on the lesser side, but on the same matter, we know that it is on the higher side, communicate. So ITC utilized for paying output tax liability, many of the officers are interpreting no interest. It is not the case. 50 subsection 1 proviso clearly communicates that only when that month liability, that tax period's liability is disclosed in that tax period's return, and for that tax, the ITC accumulated till that time is utilized. Only on the cash portion we are liable to pay interest. So that is something which is overlooked, which we need to be educating. 50 subsection 3, the 24% matter needs to be resolved, and whether ITC is utilized or not. Luckily, as I was preparing this presentation, the clarificatory circulars of the department have come in the last week, in the early part of this week, conveying to us amply that IGST, even if there is no balance, but you have corresponding balance in CGST and SGST, then there is no need to pay interest. because officers were taking a dangerous interpretation, saying IGST account, there is no balance. Overall, you might have more credit. I availed 20 lakhs of IGST wrongly. My overall ITC, CGST, SGST, 60 and 60, 1 crore and 20 lakhs. I'm saying that I have enough balance. I've never utilized IGST. He's saying no, under IGST head, there is nothing. He is citing 88B, 88C and saying, no, you have utilized IGST. I told him, sir, how can I not utilize IGST and pay the tax? As per the amended provisions of section 49, I have to use IGST. Then only I have to move to the other tax. So there is no way, impossibility of performance we argued, but luckily circular has come, clarification has come. Hence, that part of 50 subsection 3, we have to be aware, communicate to the officer during adjudication. So interest and the calculation of carry forward is what is the point to take care in 50 subsection 3. 75 subsection 9, something which I touched upon earlier itself. Interest not levied in the order does not matter, still is liable. So whether it is there in the order or not, we are liable to pay. There is no period of limitation for it. It can come anytime. And quickly, the transactions which can trigger adjudications or which can trigger actual issues are supplies to SEZ. Have the proof received from the SEZ that he is giving a acknowledgement. He is not giving the jurisdictional officer of the SEZ. He is giving an acknowledgement, or strictly speaking, from the perspective of Rule 30 of SEZ rules, we are supposed to receive a DTA procurement certificate from the SEZ, which is approved by the SEZ authority. Unless we have it, all our SEZ supplies are subject to scrutiny by the department. It is something like C form. If you don't give that form or acknowledgement, department will say you never supplied to an SEZ. And there will be a tax liability slapped on us. EOU supplies, same. We have to get that part A, the form A and form B, else we'll be in trouble. Merchant export supplies, most of the cases lies here only, where he says, I am a merchant exporter, give me 0.1% we supply. He supplies at exports, but he never gives the bill of shipping bill. Even if he's giving the shipping bill, our GST number and invoice number is not there in the shipping bill. Even if our GST number and the invoice number is there, HSN of what I supplied vis-a-vis what he exported does not match. So the officer is asking, he has put your name and invoice number, fine, but you supplied 8577, but he is exporting 7273. What is this? I will not accept this. So pay 18%. Hence, these are the ones which can trigger further liabilities where we think there is nothing that we need to pay. Interest on erroneous refund, a bone of contention. I leave it to the judgment of the individual chartered accountants to take a decision on this. Interest on erroneous refund, whether 50 subsection 1 or 50 subsection 3, has the locus standi to levy. I am still of the view that interest on erroneous refund may not be applicable in the light of 50 subsection 1 and 50 subsection 3 revised provisions. And with respect to input tax credits, as we have touched upon earlier, ensure that during adjudication, the next few things are taken care. Because if this is not done, that is where most of the adjudications go against us. Circular number 183, add to that circular number 183, both have come. And GSTR 9 table 8D is not enough to convey all the information. So please have a separate data point or a reconciliation like this, where whatever is appearing in my 2A or 2B, classify some of it as blocked, which I cannot even avail. Classify some of it as ineligible, which has become ineligible or which was ineligible at that time, but later on became eligible, I availed it. And there could be line items appearing in my 2B or 2A, which is irrelevant. They are not even my suppliers. I mean, remove that also. Mention that and don't take all these three for the purpose of matching. So whatever is remaining in 2A or 2B, this alone should be taken up for matching. And with this, only the matching can be proved. And this is something which, during adjudication, we should be able to demonstrate. If you are able to give it at the time of assessment itself, where the assessment is happening, this data, well and good. Not possible. There is a quantification post to that we can argue. And the same way, credit notes which are appearing in my 2A or 2B. If the officer is asking us to reverse the input tax credit, be very clear in the same kind of classification. Credits which are blocked, which are ineligible, when I wouldn't have even availed the ITC, why should I reverse the credit with respect to the credit notes arising out of the blocked or ineligible credits? I will not do. So all the credit notes, don't shut your eyes and reverse ITC. Irrelevant credit notes, possible. One of my client case, the opposite party, they had procured for 3 lakhs. They rejected everything, saying that nothing is meeting their specification. I do not know what is the personal anger that he was garnering against this client. He reported a credit note for 10 lakhs. Now, when what I availed from him is only 3 lakhs, and I have reversed the complete 3 lakhs, he has created a further liability of 7 lakhs on me. This I was able to prove in adjudication to the officer only by showing the relevant invoices and saying that he has reported in on the higher side. What should I do? Still, the officer is saying you should pay. And he said, sir, if that is the case, I can literally make anybody liable by reporting a credit note against them without even having legal backing, without even having made any supply to them. Can I raise a credit note? So that is where the matter is stuck. Hence, in adjudication, these can be stumping things which we will stumble. Hence, ensure that these are taken care while we do the reconciliations. And ITC that is already reversed by me, or I have already shown it as output tax liability, I need not reverse it one more time. Then only what we need to think about it is, okay, fine. Whatever is the credit note which is not getting covered into these 3 categories, yes, I will reverse now. A common pitfall with respect to adjudication. Once we take care of these from a legal perspective as well as the procedural angles, I think we are well covered in terms of adjudication of demand from a GST perspective. Now, what I'll do is I'll stop sharing my screen, and yes, I can take questions from your end. There is already a question on the chat box. Okay, there are many questions, so let's go one by one.
Yes, sir. Mr. Nayak. Shankar, sir. Tarun Gupta here.
Yes, Mr. Tarun.
Yes. So there are some questions in the chat box. If you want, you can take that one by one.
Yeah, I'm doing it, sir. I've done most of it. I mean, some of it already. So I'm coming to how penalty amount is calculated by department. Because till the time, whatever questions were there, I have already addressed. So penalty amount is calculated by the department governed by section 73-74 read with 122. That is how it goes. So the basic penalty or the maximum penalty is defined. And as I said, 73 would mean that the 10% is the maximum penalty or 10,000, whereas 74, 100% will be the penalty that will be imposed. But there can be a possibility of reduction depending upon at what stage you are ready to pay the tax, interest and penalty together. The next question is, if department reverse out GST input taken due to delay in filing of return by the supplier in audit for 1818 raise the demand with interest and penalty, the same is deposit by us in November 22. Can we claim refund or ask the GST department to allow us to claim this input now against our current liability? So seems like a circular reference. I'm not able to understand. Department reverse our GST input taken due to delay filing of return by supplier, okay, in audit for 1819 and raise the demand with interest and penalty. The same is deposit by us in November 22. Can we claim refund or can ask the GST department to allow us? I'm assuming that you are talking about my supplier filing the return late, so that it is now appearing in 2A, but it was not appearing in that time when the department had done the audit. The tax has been paid. Is what is your plea? Yes, I think the GST Council has come to a conclusion. That is why they have given Circular 193 also. Literally, they expect the declaration. They cannot go against their own rules. So that is why they have put the 36(4) restriction also in Circular 193. And they have said, okay, you go ahead, but give me a declaration. I will be able to accept and take it out. All we need to tell is we have paid the tax. Whether did he pay the tax within the time limit envisaged under 16(4) does not matter, because my supplier has paid the tax, though belatedly. I have availed the credit within the time limit envisaged under 16(4). You are entitled for the credit, is what I feel. So you can still argue that your credit is there. If the credit is already reversed by the department, yes, if he has paid, now what can we do? You are in a state of bother, because legally ITC is reversed. You cannot claim now that ITC is eligible, you give me back. That provision is not there. There is no such legal provision. Hence, maybe the revenue neutrality will have to be argued in the court of law, which I think is a distant shot. If there is difference in 2A and 3B, which one we consider? Okay, there cannot be a situation where I am hitting a century, but my team is 99 all out. It cannot happen. So same way, if an invoice is appearing in 2B, it is bound to appear in 2A. The only difference between 2B and 2A is 2A is like a video camera. Anything that comes in front of it, it will get captured. 2B will capture on like a photographic camera. Whatever appears during the time the flash happens, that time only what is going to appear is getting captured. Hence, The difference between 2A and 2B is only a timing difference, is what I'm saying. For a year for which nobody can report invoices now. Take for instance 2021-22. You cannot report invoices for 2022 now. For 2021-22, you now draw the 2A, you now draw the 2B for the full year. It will tally. On an ongoing basis, if you take it, for example, for this year 23-24, if you try to draw a 2A, it will differ because all my suppliers who have filed returns after 11th of July till today, it will appear in 2A. If you take it, it will match. There is another question. DRC 1A should be followed before issuing all notices under GST or only under section 73-74. Okay. It is read with rule 142. So if it is going to be a return related liability, which is not paid, that is what I'm assuming. If that is the case, then there need not be a DRC 1A. 76, I told you, there need not be a DRC 1A. So these are exceptional scenarios where DRC 1A need not be there. 73-74, in most of the cases, yes, DRC 1A becomes the prerequisite. Yeah, I think I've answered all the questions which were on the chat box.
Thank you so much, sir. There was one question that I had. So we talked about section 77 and the law is very clear when we have made payment of GST under the wrong head. But what about when we have claimed ITC under the wrong head? So, there was this practical situation that I faced wherein the payment of RCM liability was done under the right head, say IGST, but the credit was availed under CGST and SGST. So the law does not have any such provision right now, and that case is at the appellate stage, which I don't feel there is any scope of getting any relief from the appellate authority right now. But sir, how do we deal with such a scenario? Because this is something I think very commonly a lot of taxpayers have actually faced.
Okay, there is a possibility in two ways. One, I am liable to pay IGST under RCM, but I ended up paying CGST and SGST. This is scenario one. Scenario two, I paid liability as IGST, but I availed the credit as CGST and SGST.
Right, sir.
So these are two different mistakes. For the first mistake, I feel 77 will apply.
Correct, sir. Right,
wherein I can still say where I am liable to pay CGST and SGST, I paid IGST, but I availed the credit also as IGST. But for the second mistake, you are in trouble. Because what we have done is we have paid IGST, but the credit has been availed under CGST, SGST is a different mistake that, as you rightly said, unless there is a direction from the court, or it becomes a bigger issue, because this is a problem, but not prevalent or not common for many people. Hence, it may not even reach the ears of the GST Council. So we may not have an answer for it, is what I feel. If we have an answer, yes, wherever it is applicable, we'll be able to make use of it. But I think this will never have an answer. We'll end up paying that, reversing that ITC is what I feel.
So in case of normal forward charge, just carrying forward Sakshi's question here. So let's say in case of normal forward charge, if I availed credit under the wrong head, eventually it has gone out of the same central government and state government's kitty. So there we don't have section 77 also, which can protect us. So over there, what can be the way out? Because these are very common. This is again, I'm sure, very common. I'm sure this is something which a lot of people have done. So if you could highlight as to what can be the way out for that.
Understood. As I was saying, I was about to say that ITC 77 does not help you. What it helps you is only with respect to the output tax liability. So with respect to this ITC being wrongly availed, we can further an argument stating that since I have wrongly availed, but to what extent I have utilized this IGST to pay. So for example, if I am getting an input tax credit of CGST, SGST, I have wrongly availed it as IGST. Fine. What has happened? Did I use this IGST to do what? If I use this IGST to pay another IGST only, I can at least argue saying that I don't have, I have a revenue neutral situation, you don't have a loss to the government. Whereas on the other hand, I use this IGST to pay SGST of the state, wherein I should have not been able to use at all. Had I availed it as CGST and SGST, I cannot convince even at a higher forum. So that is why I feel this problem, we may not get anything in our favor, especially with respect to wrong head availment of ITC under the wrong head.
Right. Very well explained, sir. I mean, most of us face the issue that ITC is like a bucket of water as we feel. Once it goes into IGST head, you don't know from which head am I using it for, whether it is being used for CGST, SGST, or IGST, because it becomes one whole bucket as a whole. So that becomes a bit of a challenge. But I mean, what you said is absolutely correct. So ultimately, where is it used for is important. But in most of the cases, we face an issue that we are not able to bifurcate where exactly it's being used for also. But thank you so much for highlighting that, sir. Yeah, please, you were saying something, sir. Yeah.
As in May 2019, that is February 2019 amendment to section 49, post that we have been forced to use the IGST in the first place. So whatever IGST credit that is there for you, the first utilization opportunity is with the IGST, then comes CGST and SGST. Now, out of the bucket of IGST that is lying there, how much is the wrongly availed ITC, whether it was used for payment of IGST or how much has gone to CGST, SGST, we will not be able to prove, which is the reason why I feel department will not solve the problem. They will leave the problem. Eventually, it will become our problem because they themselves do not know how to give a solution for it. Like safari retreats. Safari retreats, one of the senior advocates told me that you will never see a judgment in the Supreme Court for that. He told me 1 year back. And all we have been seeing post that is,
hearings after hearings.
Says, Tariq pe Tariq, Tariq pe Tariq. You see, dates being given, you don't see the judgment coming out. Maybe these are problems they don't want to solve.
That's right. Absolutely. From our perspective, I mean, major part of it, unlike our output taxes, where taxes goes to the wrong state, at least with the input tax credit, from that perspective, we are a little on a better footing compared to output taxes. So that may help us. That again depends on how the court perceives it in the long run, because this is only something which we are only contemplating.
Yes.
So, yeah. So I think.
So I should formally thank the organizers for giving me an opportunity in this online forum to interact with your esteemed members on this the advanced certificate course. Thank you. Thanks to the organizers and all the best to the participants. Over to the organizers.
So first of all, thank you from our side that you have spared your valuable time in spite of having so many different commitments. We had to reschedule, which you did it in one go altogether, that we wanted it to complete here on this particular day. On a Saturday, you have taken a session. So this is something which we are all very grateful for. And you have been very kind enough for discussing each and every smallest aspect of the adjudication proceedings that we are required to know as a professional. Because adjudication is perhaps the most important topic, if I'm not mistaken, in the whole of this course, because we are facing notices and we are being bombarded with notices on a regular basis. So most of the notices people are tackling by replying, at least for ASMT and all these notices, they are mostly factual based. But when it comes to adjudication notice, we are really struggling in terms of how do we answer question of law notices? Where do we stand on going to high courts on those kind of notices? How do we actually tackle notices which are resulting in, let's say, culmination through department audit, through other proceedings? So you have started right from the beginning as to how department audit results in just particular proceedings, and how do we tackle these notices and all the provisions relating to where we are collecting taxes but not paying, section 73, 74, the general principles for demand and recovery, which are extremely relevant on today's date, which not a lot of us are very frequently seeing on a regular basis, though it is required for us to read regularly. So this is something which is going to be, I'm sure, very helpful for all the participants. So, sir, from our side, we would just like to thank you for sparing your time and giving so many insights on this particular topic. And we'll also request you to accept this e-memento from our side, though it is not physically there with you right now, but I'm sure you can keep a printout of it if it is convenient to you, sir. We'll give it to you. And thank you so much, sir, once again, for giving us your insights on this topic. So, Tarun, you would like to say something?
Yes, thank you. I have been hearing the entire session and it was a really wonderful session. Sir has taken us through the entire chapter slide by slide. So we will request, sir, if we can share the presentation immediately after the session so that we can send it to the participants. So thank you, sir. Thank you so much, sir. And we will look forward to having you again in our future programs.
Thank you so much, sir. So we are having one more session right after this from 4 to 5 on recommendations of the GST Council meeting. So we leave it up to you if you want to stay and if you want to hear out our next speaker, Arup Dasgupta sir, who's already here. And
That is why Arup was joining in the session. I just saw Arup joining the session.
yeah.
Wonderful
session was.
I'm sitting at office. The power has gone some 1 hour back. So people are telling me from there that anytime the internet connection will go down.
Oh my God.
Okay.
So the internet has not deceived you, sir. I mean, we are happy.
So it is still there. As you can see, I'm perspiring because AC has stopped. Everything has stopped here. So I'll try to deal with my mobile and hear Arup's session. Sure. Thank you.
Thank you.
Thank you so much, sir. You can stay active the way you want, sir. There is no issue. Thank you. Arupda, thank you so much for joining us on such a short notice, because we had recommendations coming in just a few days back, and thereafter we had 2 circulars which have already come in, and a few notifications have come in for amnesty also. So we are delighted to have you. We have Siddhant as our moderator for the session today. He'll be introducing the topic as well as the speaker, and thereafter he'll carry forward and moderate the session for today. So over to you, Siddhant. Yeah, please.
Can I request you to just stop the recording?